Hello, everyone. It's a small crowd today, which is okay because it makes for more intimate conversations. I'm Justina Kanza. I'm the Program and Community Manager at Woveo, and I'm going to be moderating today's session as part of our Community Financial Education series that we're doing here at Woveo. In partnership with multiple community partners, including the Black Founders Network, African Impact Initiative, SCBN, Case Corp, All Black Market, and a lot of other community organizations that some of you folks might be coming in through. And so today's session is going to be, it's part 2 of our 4-part series. We had our first session last week, which was focused on navigating the financial landscape for newcomers in Canada, which was led by Adiba. But today we're going to be picking up the conversation from last week and transitioning into understanding credit scores and their importance. And this session will be hosted by the lovely JP, Jean-Paul Nyereka, who's a community financial wellness expert. And I'll give a little bit of an introduction on him shortly. And he'll also be moderating and facilitating a second session next week, which is about understanding debt and how to manage debt as well. So it will be same time next week, Wednesday. In case you're interested in joining that too, I'll make sure to add the link to the chat so you can register. And then our last session for the month, at least, will be on November 27th by Aderemi Kelala. And she'll be sharing about building healthy savings habits for different financial goals. And so before I get into today's session and sharing a little bit about JP and passing it over to him, I wanted to go through a little bit about Woveo, what we do, why we do what we do, and what it is that we aim to achieve with the community. And so part of the data that I always start with sharing this data, and with a caveat that, I'm throwing this data at you, but a lot of us leave this data in our day-to-day lives, right? Because we're marginalized and underbanked in some instances. So the challenge that we're trying to solve for is the financial barriers that underbanked, and I imagine a lot of us on this call, immigrants as well, face, which is 75% struggle to find a loan of about $10,000. A huge percentage of about 74 hold high interest debts. And if you're an entrepreneur like myself, 71% of us have to bootstrap our own businesses because as Black entrepreneurs, we are underfunded by VCs. We're excluded from traditional financial banking solutions. And in the moments where, we don't have this capital, we have to lend, we have to borrow from somewhere, and we're borrowing from payday lenders who 30 of us borrow from them, but they have excruciatingly high interest rates of upwards of 40%, right? So that does impact our access to capital and also our repayment, because a huge amount of what we're making from our businesses or our jobs, we're having to repay in interest loans. So that's the main challenge that we found. And so to dive a little bit deeper on this challenge as well, as I mentioned, why do the numbers look the way that they look, right? Why is there high interest debt amongst underbanked immigrant Canadians? So one of the issues is limited access to credit. So many individuals face challenges in accessing affordable credit due to factors such as limited credit history, especially if you're a newcomer, income disparities, and systemic barriers within the financial system. And as JP shares a little bit about what building a credit score and navigating the credit landscape in Canada looks like, he will share a little bit about what some of these systemic barriers look like. I see Maureen also joined us. Maureen and Goodwin, welcome. We're just going through a little bit of an understanding of what Woveo is and why we do the work that we do. And I am Justina Kanza. I'm the Program and Community Manager here, so I'll be moderating this session. And if there's anyone that has questions, as myself or JP, who I'll be calling on shortly, are speaking, just add it to the chat and I'll have access to the chat. I can moderate that for you. And so back to the challenges, I mentioned the limited access to credit. but how does this impact us as a community? One of the biggest ones is the hindrance to starting and growing and investing in our businesses, because we don't have the capital to do so, and bootstrapping can be expensive. And so this limits our economic opportunities. So one of the solutions we've built here at Woveo is an alternative credit building tool that leverages rotating saving circles, microloans, and peer-to-peer lending. So rotating saving circles is especially one that's an exciting offering for me personally, because it's really building on indigenous African financial models. Like, I know the Nigerians would call it susu or ajo. That I know there's some Rwandans in the room, so you guys would call it ibimina or tontine, and in Zambia, where I'm from, we would call it chilimba. So really leveraging on these financial models that have existed for decades in our community. Our grandmothers and grandmothers have used this before, and building a technology around that and using it to deploy capital. The other challenge that leads to these statistics that I shared earlier is low financial education. And it says financial literacy there, but I try to replace literacy with education, because education is more empowering. But low financial education, right? So there's often low financial education within our communities, which leads to difficulties in understanding financial products and managing finances effectively and making informed financial decisions. I often give an example here of my own story. I moved from Zambia in 2017. And one of the first things that I did on like day one or day two of being in Canada was walk to a bank to obviously open a bank account. I was a very impressionable young international student at the time. And they offered me a credit card. They're like, oh, you can also get a credit card for $1,000. I was like, oh, cool, $1,000 for me. We don't have credit card. I'm sure we have credit cards back home, but that's not a culture that I was used to. I had never been exposed to a credit card. So what I thought they were doing is giving me money, like free money to spend every month. So I went with my credit card, just tapping it here and there and not even realizing I had to pay it back, right? And one of the things that I know JP will talk about when he shares what affects your credit score is utilization and also timely repayments. I didn't know all of these things. So as you can imagine, it impacted my credit score. And so the impact of low financial education in our community cannot be overemphasized, because the unfamiliarity with conventional financial products and services leads to confusion. It leads to distract and missed opportunities for wealth building. And one of the solutions is exactly what we're doing today. One of the solutions that Woveo is implementing, it's financial education. We're just bridging the gap between traditional practices that we know from back home and integrating into the Canadian financial system and understanding this concept, so that as we go to banks, as we go to financial experts, we're going there confidently and being able to advocate for ourselves financially. And then the other piece is obviously the discrimination in financial services, so biases within the financial industry. One of the key insights here for me at least has been how Black entrepreneurs are underfunded. I worked with the Black Founders Network before, and this is data that we worked a lot with. We saw that Black entrepreneurs, for example, in North America, receive less than 2% of VC funding, right? So there's a lot of discrimination there. So how do we as a community come together and use community economic development facilities, if you will, to foster collaborative and supportive environment where individuals can access resources and tools to overcome barriers? So one of the services, and I was just saying to JP before this, one of the programs that we're launching in the next few months is the capital deployment program, where we'll actually be supporting those entrepreneurs that are especially excluded from the traditional financial system, or when they're included, it's with high interest rates. We'll be creating a solution for them where they can access capital through Woveo at a low cost interest rate compared to what the market price is. So as I was saying, this is what we've built. This is from the different challenges that I mentioned. This is a solution that we've built. So we built a community wallet, which is a technology built on this traditional, indigenous, and community and collective principles. So we built a technology around that, the technology facility that helps communities mobilize capital, access to low-cost credit, and build credit history in a way that is secure, transparent, and also community-driven. So the different, services, outcomes, and benefits (SOBs), if you will, that you can get from Woveo. So the services I mentioned, the financial education piece. I've mentioned the cash advance as one of the features. So the cash advance capital deployment structure. And then also we have savings and credit groups as part of our offering. So you think Ajo, Esusu, Ibimina, Tontin, Chama, Paluagan, whatever the name is, depending on where you're from, using those traditional models to actually have a credit group that you can borrow from a community pool of funds. And then credit score building, because we have a partnership with Equifax that facilitates this piece, and then credit score monitoring for free on the app as well. And then the benefit for us by providing this community wallet is less financial stress, which leads to improved health, because you're less stressed about where your next paycheck will come from, because there's this credit facility that allows you to borrow for a low interest rate. We're hoping that this improves community economic development, yes, but also community health. We're also reducing the cost of borrowing, reducing the levels of high interest debts, because we're offering you an alternative to what the payday lenders offer you, an improved financial and credit score education, as will be evidenced by today's session, and enforced savings practices and financial security. So I talked a little bit about our capital deployment program that's coming up in the next few months. I know a lot of folks on this call might be entrepreneurs or business owners, or just you want capital for whatever venture you are taking on, whether it's school, whether it's a business. And so our platform is leveraging rotating saving circles, aka credit groups, aka AJOLs, to facilitate upfront capital deployment for you. So there's different benefits that you can get, such as upfront capital that you can pay back within a certain amount of time at a low interest rate. And some of these loans will actually be interest free because of the partnerships that we are building with community partners that you might even know of, you might even be members of. So more to come on this. But once I pass it over to JP, I'll be adding some links in the chat that you can follow as CTAs, as calls to action, just to get you a little bit settled in and to get you engaged in the work we're doing. We also have $500 upskilling grants, and it's a very simple application. I made it myself. I made sure it was no more than 5 minutes. It will take you no more than 5 minutes. I'll put the link in the chat as well. So fill out that link. You might be viable to win a $500 upskilling grant that you can use towards acquisition of micro credentials or whatever course that you want to take to upskill you to improve your employability and increase your earning potential. Okay. Yes. Now on to the important part, the thing that we came here for. So today's session is focused on understanding credit scores and their importance. And as I mentioned, it is being chaired by JP, John Paul Nyereka, and I'm honored to introduce JP, who's a visionary, whose journey has actually ranged from surviving the Rwandan genocide to becoming a beacon of hope and innovation in Canada and in our community, and that's nothing short of amazing. I don't want to, I've got this bio that I don't want to read through because I feel like I've been talking a lot, but all to say JP is a phenomenal person. He's done 12 years of his career in banking with RBC, with BMO, and rapid career advancement for him through those banks that he worked at, including 7 promotions over 12 years, right? So it tells you the kind of expertise that you can expect from him and the kind of dedication you can expect from him in terms of how he's serving the community with his different initiatives. So I will pass it over to you, JP, to introduce yourself, introduce the work that you do, and walk us through the session that you have prepared for us today. And I'll pass it over to you to share your screen as well.
Amazing. Thank you so much. I really appreciate what you have done for the introduction, and I appreciate what Woveo does in general. I just want to make sure that everybody can see my screen. Can you see my screen? It's a bit pink. It's a little bit energetic. So, I want you guys, you have taken the first step to spend an afternoon with Woveo, and learn about your credit scores, there's no better investment in financial wellness than understanding your credit score. So I see some energetic emojis. Yes, keep them coming. I'm excited to be here with you, especially because this is a passion of mine. Financial wellness and financial education is a part of financial wellness, is something that I've dedicated my life to. But before I was in financial wellness, as you can see, I consider wellness over stress as the model to go with as far as your finances are concerned. And today you will learn a big part of financial wellness, which is understanding your credit score. Now, this is not the first time I've partnered with Woveo. I've actually had a very long and uh, fruitful chat with Justina on the podcast. And we meet at different places as we all consider just improvement of household wealth to be the goal that we're working on. Now, today's presentation is just wellness and money as usual, but it's specifically about credit scores. The reason why credit scores are important, we'll explore in a few slides from now. But I just want to let you know why you should listen to me when it comes to these things. First of all, I think I was lending money before people were tapping their Visa and MasterCards. You still had to remember your PIN. I've been doing this for a long, long, long time. And I've lent money to businesses, I've lent money to individuals, and I have volunteered on different organizations that allowed me to manage their money. And a couple of years ago, I started Pocketbook Wellness to make sure that this information is passed on to you, the people who are willing to take on a little bit of knowledge and a little bit of um, like ambition towards their finances. And my goal is to provide you the tools that you need to make sure that you feel the progress after investing the hour that you will invest with us today. And the tips that you get from here, you can build on what you got last week or what you're going to get from me next week about debt management. So my journey has been through real estate. I was the program manager for real estate back in the really, really good times of COVID when we were just printing the money left, right, and center. I was the one who wrote the real estate policy for Bank of Montreal Commercial. And yes, it was an amazing time. But before that, I'm a Rwandese refugee who turned Canadian citizen. I'm a son, I'm a brother. My brother's actually in the chat right now. Big ups to John. And I'm one of the leading voices in financial wellness in Toronto. I've invested a lot of time, but I also have expertise in the sense that I've created the competitor to uh, uh, financial scoring, that is the wellness score. I know we're talking about the credit score today, which is more impactful for your life than the wellness score, but I will introduce it in a moment. I am excellently qualified to try to help you with this part because I have my bank experience that I've talked about. I have my CPA training, and I'm qualified on the life insurance side. And because of all my licenses and people that regulate me, this is not financial advice. This is financial education. So now that we've set the table, let's get into the fun stuff. So my journey has been a meandering journey, as many of you have in your own personal journeys. You try things professionally and you try things on a spiritual level, and everything led me to financial wellness. And the element of financial wellness that I want to spread today is understanding your credit score. Your journey in Canada, if you embrace financial literacy, it's going to be so much easier for you to go through your Canadian experience. And financial literacy doesn't mean you attend today and then you learn everything from me today. That might take a whole day, and I don't know if you have that kind of time. I'm committed to it. So if you're down, let me know that you're down to learn. But embracing literacy will help you go through the Canadian experience without making the common mistakes, and with a guiding principle and a mentorship that comes around where you meet people like me, Justina, when you start embracing financial literacy, and they'll lead you to the right place that you need to be. So I implore you, I thank you that today you have committed this hour to learn, and then take to heart what I will teach. But at the same time, let's focus on what we came here for. Now, this score, the credit score, is the main description of how you navigate Canada.
Sorry,
Every,
JP.
yeah,
Have you switched slides? We're still on the introduction slide. If you switch slides, we can't see, and at least I can't see any slide.
oh, yes, I actually have been going through the slides.
Oh,
Sorry, let me see.
sometimes Google Meet does that.
Okay, so yes, I was on several different slides actually.
Oh, I'm sorry.
That is so I actually can see the presenter view. So next time I'll catch it myself. But
Okay.
welcome to Understanding Your Credit Score. And what we're going to learn today will be why this is important. So 65% of Canadians feel overwhelmed when they're dealing with insurance and banking. 70% of people struggle with their finances, and over 60% of lenders reject all their applications because people are not ready. Understanding your credit score will remove you from all those numbers, or at least reduce your chances of ending up in all those numbers that are overwhelmed, that are struggling with finances, and that get their loans rejected. To give you some other facts, FACE, which is an organization that actually does uh, business loans for Black people, they reject over 90% of their applications. Guess what the number one reason is? People are not ready with their credit scores. So today you're going to understand how you could be ready. And whenever you start your business, you are going to be more than ready to be part of the 10% that gets accepted. Now, why is a credit score important? So if you want to make a living, you get a job. If you want to make wealth, you will end up needing credit. And credit is only given based on your credit score. So I could not emphasize how direct it is to have a good credit score to access wealth in Canada. We come from cash-based societies, most of us, where the credit score system is not as developed as it is in Canada. Canada has one of the most mature credit scores, that it has started becoming a tool of trust. So even when you're renting homes, I know some of you are homeowners, some of you are renters. If you're a renter, your landlord will check your credit score. Even though they are not giving you credit, a good credit score will allow you a good home, even if you're not buying it. Now, if you're buying a home, we will discuss what kind of score you need, but it will be very important for you to have a good credit score. And I can tell you for certain that 1 out of 5 Black people have a credit score less than 620. Once we write that number down, once you get the bands that I will show you in a bit, you will understand where 620 fits. Now, I want you to go in the chat. If you're not driving, you're not holding a baby, and you're maybe holding your drink in one hand, as I see Justina, type what you think, what number between 300 and 850 you think a good credit score is. The other last part of why a credit score is important, some job opportunities will actually check your credit, especially if you're working in finance, you're working around money or trust-based things. They will want to know that you are actually trustworthy, and they don't have any other way of knowing other than your credit score. So some job opportunities can be taken away by a bad credit score. Now, knowing this alone is not going to fix your credit score. Oh, somebody says 700 is a good score. 600 to 700. If I say 720, those are great numbers. I haven't seen somebody say 900. Why is there no 800? But we'll get to that. So literacy alone will not help. So I implore you to embrace financial wellness. This is part of the only part that I present wellness, but I'm a wellness expert. So forgive me, I have to put it in context. Managing cash flow, saving and investing, something that Woveo helps you with. Building network is also the net worth is also part of that. Mitigating risk, this is getting your insurances, and staying financially literate. So add one thing every single time you get a chance, and your stress will start to go down. As part of what you should measure, these are the four things that you should measure: your credit score, your wellness score, your disposable income, and your net worth. We are focusing today on the credit score. I will tell you everything about how it's calculated, but if it's not the biggest one, it's not more than number two. Now, the wellness score is also available. It's something I invented, and it covers more than the credit score, but it's not, you cannot take it to the bank. The credit score, you can actually take it to the bank. Now, there are two ways to look at the credit score. Is it a credit score? Is it a credit report? Now, let's get into it. Most of the things that I see when the discussions come around is, what's your credit score? What's your number? What's your number? This is a 3-digit number, as you guys have typed. But even more than that, there's a credit report. A credit report is how you go through mostly financial markets. They don't have to be financial markets, because sometimes it's just, like I mentioned, it's an immature credit scoring system that it's now a trust scoring system. So it goes through, a credit report goes through your history, everything you have done, bills that you have paid, bills that you have not paid, inquiries, and all these things. And it involves dates, and it involves account numbers. That is your credit report. In Canada, it's tracked by two organizations, which I will tell you in a minute. But the credit score takes all that stuff that is in the credit report, and it puts it in a nice, easy to understand number of 3 digits, between 300 and 850. So that's the difference between a credit report and a credit score. Now, you want a really good credit score, but sometimes you might have to look at the credit report to understand how they go to that score. I'll let you know why it is important to look at your credit report in addition to knowing your score. You could know your score, but what if they made an error in calculating your credit score? What if, our names? Our names can be very complicated for the credit system here to understand. So if, let's say, Justina Kanza goes into a bank and says, I would like a credit card, please. Actually, you don't have to do it, because once you go to university, somebody will come to you and say, you know what, here is a card, you tap it. And they won't tell you that the money you tap is due. I think Justina has mentioned it before. When you first got your credit card, I'm sure you all did not get all the information that is necessary. But once that person, right, instead of Kanza, writes Kanzi, that does not go to your credit score. It starts a new credit score. So that's an error that might be holding back your credit score. And you won't find out until you go to your credit report and you notice that, oh, wait a minute, I have two credit reports. If you have two credit reports, they're eating from each other. Awesome. All right. So who creates credit scores in Canada? I'm sure this is what you all came for. Who is this person that keeps discriminating against Black and brown people? Well, I cannot tell you specifically how the discrimination happens. I can just tell you the services that you get because of credit scores disadvantage Black and brown people, just from how we've seen the market operate. But there are two companies that primarily calculate and create your credit scores that then bankers use to determine who gets credit and who doesn't. They are Equifax and TransUnion. Equifax is a global conglomerate, and TransUnion is as well, but TransUnion was Canadian to start. They calculate about the same weighting. I will show you the weights in a bit. So they will not use the same formula. They all have their own formulas. We have an idea what kind of formulas they use, but they arrive about the same thing. There is no chance that you would have a TransUnion 800 score and an Equifax 600 score. The part that will be very important for you is when you decide when to check your credit report. As I mentioned in the slide before, I'm just going to go back. you can over let's say the course of the year, you can go into your Woveo app and check your credit score. You can go into your banking app and check your credit score. When it's time to check your credit report, you are going to have to go to these two organizations, TransUnion or Equifax. You can choose either or, but they usually match their information. Okay, so how do they calculate it? All right, there are 5 things. And as you can see, I've only listed 4. If you can go through the slide quickly and you tell me what I have missed, I don't know. I don't have a biscuit to share, but I'll give you big hand claps. Okay. The credit score is based on 5 elements. I've listed 4. The last one is coming. I hope you can see the slide. I'll go through the 4, and if you can see what I missed, type it in the chat. Okay.
JP, so I had an exciting idea there. We can actually make this a trivia because we do have $100 to give away. So whoever is
No
going to
way.
get the big
Okay.
one first is going to win the $100.
Okay, perfect. It's going to take 5 minutes. You could win. Come on. This is tough times, financial times. You got to win that. Okay. There are 5 elements of a credit score. I have listed 4 here, and I'm about to explain the 4. By the time I'm done explaining the 4, you should type what I'm missing. And if not, we'll move on and I will explain what I'm missing. So the first part, the biggest part, your payment history, how you pay your bills. Now, this part, I want to slow it down because there is no way you can have a good credit score. Yes, please don't ChatGPT this. You have to know it to win. There's no way you can have a good credit score without a good payment history. Now, what does a payment history mean? How you've been paying your bills. Now, the bills that are reported are usually financial, but you will see later on, I'll show you how you can get your rent to add to your payment of bills. Now, when you have, let's take an example of a credit card. When your credit card is calculated on the 30th, you owe $100 and the minimum payment is $2. If you don't pay the minimum payment, you have missed the payment. And you will get the grace period if it says C. That's a good try. No, I listed 4 things. There's a 5th one that is missing that is on the next slide. So if you do not pay your minimum payments, it means you have missed a payment. If you owe 100 and you can only make the minimum payment and you pay the minimum payment, you have made your payment. It does not mean clearing your balance. So please understand, when you receive your bill, look at the minimum payment, and whatever happens, make sure that minimum payment is paid. Every time you miss a payment, it affects that 35% of your credit score. Now, the second part is on the balance. If you have $1,000 in, let's say, credit card, I'm going to use credit card a lot in these examples because it's an easier one to understand. But there are some other things that you should also be aware of, like car loans, lines of credit, mortgages, things like those. The contractual number is the number that is due or the minimum payment. And how much credit you have also affects how much credit you have versus how much you've used also affects your credit. If you use more than 30% of your credit, it just signals to lenders that you need that 30% to live inside your means, but anything more than that, you're living outside your means, which means you're financing your lifestyle on credit, and that's not a good use of credit. Those two account for 65% of your score. So even if you do nothing else and you make sure you pay your history well, make sure every single minimum payment is taken care of every month and not to miss a month, and then you keep your credit utilization under 30%, you're going to have a good score. But there are other things that account for the remaining 35%. The 10%, I see a couple answers. Yes, when is the question answer required? In the next 2 minutes. Bliss, in the next 2 minutes, I'm about to explain the length of credit history and the new credit, and then that's it. I flip the page, and then we'll probably have another question if Justina wants, if this one is not answered. This says mixed credit. Good try, but not quite. If you also said mixed credit, so you would have tied and split the money. John says bankruptcy. But bankruptcy is actually part of your payment history, because if you don't pay your bills and the lender gives up on recovering that money, there's a scenario where if debt becomes too much, we are going to do this next week. When debt becomes too much, you can go and make a bankruptcy arrangement or a consumer proposal to start over. This is not the presentation for that. We'll discuss that in the next presentation, which I'm excited. That one we'll talk about different ways to reduce your debt. But like I mentioned, the two things that account for the most is payment history and credit utilization. The length of credit history. Now, this is where we get disadvantaged as immigrants. Imagine if you are 17 in Canada and you get your first credit card. Your longest account actually accounts for is it open? Yes, it's not the answer, but that's a good point. That is a good point. And that will be in my number 4, new credit. So if you open your first credit card at 17, by the time we are finishing college at 25 or 26, you have 7 years of credit history. While somebody who just moved to Canada at 22 to start college only has 4 years of credit history. So does that create a disadvantage? Yes. In that 15% of length of credit history, the longer you have been paying bills on time and in a predictable fashion, and the longer you've had a credit account, the better your credit score is going to be. Now, some people want to change their credit cards and go to a new bank, new credit card. Never close your first credit card, because when you close your first credit card that might have the longest period of time, you're going to go down in that 15% of your score. Oh my God, if I had it, Masuino. Okay. All right. So if you just answered it, I'm going to announce it later. But everybody give her some claps. I know we all wanted that 100, but only one person can win. Just give her some claps. Hey, next time is gonna be you now. Show up next week for the debt management one, and I'm sure Justina will arrange something. Okay, so the last part is new credit. If you go around opening up new credit, 10% of your score will start to suffer, because you only use credit when you need it. When was the last time you needed 4 credit cards to pay a bill? Never. So the way the credit system looks at you is that, okay, you're either opening them to get rewards, you're either opening them to get some sort of churning, credit card juggling, which is like you take from one, you pay the other, you take from one, you pay the other. By the way, that is credit card abuse, because the interest you get is cash advance credit interest, and that's very, very high. Do not do that, but I'll speak to that a little bit later. So that is this 4: payment history, credit utilization, length of credit history, and new credit account for 90% of your credit score. 90%. And then, Ife, what's the 10%? Inquiries. Yes, so inquiries. There are 2 types. You better not have ChatGPT, then I will find out. So there are 2 types of inquiries. Inquiries is when you go to seek credit, you go to buy a car, you go to shop for a house, you go to shop for a new credit card. And nowadays, even medical procedures are starting to like do inquiries. Let's say your landlord asks you to check your credit. These inquiries account for 10% of your score. So the more, if you do too many of them, they are going to start reducing your score. But there are 2 types. There are 2 types of credit score, credit inquiries. There's a hard credit check and a soft credit check. So an organization like Woveo allows you to check your score anytime you want. Is it anytime? Yes. So anytime you want. That does not affect your credit. So having an app like Woveo that allows you to check your score will not reduce or impact your credit score whatsoever, because that's called a soft hit. That is not a request for credit. However, if you go to your landlord and they do a real inquiry, that is a hard hit. And mostly it's recommended that you have no more than two like, let's say if you no more than two every 6 months, because that's kind of like it's normal, it's understandable. However, they notice that there's a big problem that is coming around when people are shopping. Let's say you're shopping for mortgages or cars, that you're going to 2, 3, 4 different dealerships. If you are going to be shopping in the market, to reduce how much the inquiries affect your credit score, compress all the credit checks into 2 weeks. They will count as one hard check. I'm going to say that again. This is a tip on how to manage this 10% of inquiries. If you are shopping in the market, let's say you're shopping for a car and you have 5 dealerships you're going to go to, make sure you go to all 5 within a period of 2 weeks. And that's going to count as one check. If every 2 weeks you go to each one, it's going to be 5 checks. And that's going to reduce your 10%. Everybody got that? Send me some thumbs up, because I would definitely have to re-emphasize that, because this is one of the things you can control as far as it goes to your credit score. You can control how you pay your bills. You cannot control the length of your credit history, but you can control how many checks you let people do on your credit. This goes to when you're house hunting as well. If you're looking for a new place to stay, ask all your landlords and all your potential landlords to check your credit in those 2 weeks. Literally set the calendar and say, okay, if you are going to consider renting to me, check my credit in these 2 weeks. And that's all going to count as one. Okay? So thank you so much for paying attention to that. That's very important. Now you have 100% of your credit explained, and if it has $100, I think. Right. So credit score credit score rating is rated in different bands. Okay? It's not just any number. Like, we cannot all arrive at different numbers and then the banks have to make a decision. Yes, the number is different, but they really are different. Just the 5 bands. There's very poor credit, fair credit, good credit, and excellent credit. Your credit worthiness is in those groups. So it's not always important to get the 850 credit. If you have 780, you can get the same services that somebody with 840 will get. And literally anything over 640 will start to give you the benefits of people who have 700. So it's important to be in the good band or excellent band. Okay. So with that said, these are based on Equifax. And the reason why I'm showing you this is to understand the biggest wealth creating force in Canada is the home. Like, accessing a house will be the biggest wealth creating force that you actually get. And to give you an idea of how far behind Black people are, 72% of families in Canada have homes in total. Only 45% of Black families have homes. And the biggest thing they consider, there are 3 things, but credit score, down payment, and income. We are lagging in pretty much all those 3, but something like Woveo can help you save on your down payment. Your credit score, on the other hand, that is up to you. You have to take very, very good care of it. And a minimum of 600 is what the Canada Mortgage and Housing Corporation will allow for you to get insurance if you want to put down a lower amount on your home purchase. So at the very minimum, you need to have 600 credit. It's not very good, but it's just good enough. So I remember in the chat we had some questions on what's good credit. Try to get above 600. And I will give you some tips on how you can increase your credit in a moment. But these are the factors put in a nice graph that affect your credit. Payments on time. Balance of amounts are owed. So this is the utilization. The length of credit, the credit mix. If you have less than 4 credit accounts, your credit score is considered shallow. Okay? And shallow is not bad, it's just not great. So as much as we all don't like debt, interacting and showing that you're good at managing your credit is very important to succeed in this system. Now, what are the tips to improve your credit? I'm sure that's all you came for, and I'm willing to deliver beyond your wildest dreams. First, pay your bills on time. If you cannot pay your bill, pay the minimum payment. If you cannot pay the minimum payment, call your bank. Call your provider. Second, keep your utilization under 30% or just pay it off. The lower the utilization, the higher your credit score will be. Check your credit report regularly. I will come back to this, but I've mentioned to you at least once a year, go to Equifax or TransUnion and check your credit report. It is mandated by the government that they have to show you your credit report. That is your information. Every once a year, they owe you a credit report, so go get it. They owe you already. Do not close your oldest account because that is anchoring your credit score. Okay. There are other ways that you can actually add some information to your credit score to boost how you look, to boost your score. And this is reporting rent. This is upcoming, this is newer, and this goes in line with how innovative finance is getting. So Woveo, if you participate in Woveo, they will also report how you're making your savings, which is a little bit crazy to understand. How you're making your savings is going to count as how you're paying your debt, which is going to add an account to the 4 accounts that you need to have a deep enough credit for a lender to understand. But rent reporting is one of these new ideas that we all pay rent, whether we like it or we don't. And if you don't pay rent, it means you own the house, or even better, you live with your parents. It's always better to have somebody else pay it. But if you do rent and you pay your rent, you can go to Borrowell, Front Lobby, or Chexi and actually sign up to count your rental payments as part of your credit. I've got a question in the chat. What's the logic behind hard credit checks affecting your credit score? Doesn't seem fair. That's a good point. So if you don't use one of your credit cards anymore and to leave it open, it won't affect your score. Yes, if you're not using it, leaving it open will not affect your score. If you're not using it and you have a balance, even if it's $1, they will send you a bill for $1. If you miss that bill, it will be the same as owing 1,000 and not paying. Right?
That's a little bit crazy. So, because for me too, I think I share in Aoife's question, right? It's like you don't use the card anymore. Why do you want to keep it open? But I understand from the factors that that add to a high credit score. It's the credit history. You just want to deal with the length. So, what if I had, say, $1,000 limit on a card? I have 0 utilization on that card, so I don't really have a bill to pay towards it. Does that help my credit score grow? Or I imagine an alternative to that is automated payments as well, right? Because you can automate payments to your credit card, even if it's like $1 per month to kind of meet the deadline of that payment.
Yes, and I think you're stealing my thunder because I have a slide on how to not miss a payment.
Oh, okay. Okay, sounds good. Well, in that case, I'll leave you to Thunder. In the meantime, that's so funny. I wanted to share also on the rent reporting that actually Woveo is working on something there. So
Nice. Yeah.
to be able to increase your credit score and build your credit history using the rotating savings circle model, we're looking for ways that you can do that with your rent reporting as well. So keep an eye out.
Amazing. And to put some emphasis on how important that is, previously what you had to do is get a credit card. So the credit scoring was channeling people to credit cards, and we have noticed that credit cards lead people down spending problems that are much bigger than the need to have a good credit score. So if you can bring the credit scoring system into a trust system on how you're paying your bills to your library, how you're paying your bills to your tenant, how you're paying your bills to your savings, that's much better than telling people, oh, get 2 credit cards to get a rich enough credit file that you're not considered shallow. But Justine, I'm happy that Woveo is working on this, because I believe that our people need this more than any other people, because we are cash first, and to get somebody to tell us you have to take my money and pay me back so that I can see that you're good. So let me just answer a couple questions and then get back to the presentation on how you can improve your credit score further. So first of all, what's the logic behind hard checks affecting your credit score? So hard checks, and I agree, the fairness is questionable, but looking at it from a lender, and I was a lender for over 12 years, if somebody is going around asking for credit, that's not attractive for me as a lender, for this person to come to me, because why are they going around looking for credit? So it's called credit seeking behavior. It's not fair, and that's one of the reasons why they lumped up that 2-week time, because people are like, I'm just shopping for a car and I'm using seven credit hits, and you guys are saying that I'm a credit seeker, but I'm not a credit seeker. I just want one car, and I have to compare and price shop. Now, if it's turned around on its head, yes, you should limit what a credit history is from how somebody's paying their bills. But that's not the formula we're working with now. So I can't say to the fairness, but I see you. Another question was, what if somebody utilizes all his credit on the card, then refund like 70% before the e-statement comes out? Will they consider in the system that she has utilized the whole amount first, or the one on the e-statement? Now, there are 2 dates for credit cards. There's the date that the balance is calculated. That's used for your utilization. There's the date that the payment is due. That's used for your payment history. If your payment is due on the 31st, however much money you owe on the 31st, that's your balance to you. It goes to your utilization. You have a grace period of about 21 days. If in 21 days you have not paid the minimum payment, you have missed the payment. I hope you understand that. Those are 2 dates separated by grace period. When the cutoff is, that's when they know your utilization. When the payment due date is, that's when the minimum payment is due. And with respect to time, let me just keep on moving on the slides. Now, this part I'm calling is spring cleaning. Make sure you every once in a year, you're looking at your credit file and then removing these 4 things. Errors. 44% of credit reports and credit files have errors. Having an African name, I can guarantee you somebody messed it up in the system somewhere. So go and get your free credit report, fix the errors. Fraudsters, ID fraud has been the biggest thing. Like you probably heard, cybersecurity has been booming as a job. The reason why cybersecurity is booming is because ID fraudsters have gone out of this world. Now, misreporting. Sometimes you pay something off and they don't note it as paid. The people who report are not perfect. And then remove collections and other bad things that have happened if they don't drop off automatically. This can only be found by checking your credit report. So the 2 organizations that calculate the credit report that I have mentioned, Equifax and TransUnion, That's where you find your credit report and you go through it once a year. Choose your birthday if you have to. Go through it once a year and remove all of these things that we are saying will reduce your score, especially if you're coming very close to a decision that involves credit. Moving from a house, buying a car, or getting a job that you love that involves trust. Do that 90 days before, because it can take up to 90 days to clear these things up.
A quick question on that one, JP.
Yes.
The previous slide, if we may go back there. So I know one of the things you mentioned is removing collections and things like that, but I do know that there is certain regulations around how long certain things can stay on your report, such as collections, bankruptcy, and consumer proposals. So how do people navigate the process of removing those, even if, say, you paid your consumer proposal and now you need your file in good standing once again? I know it takes about 7 years for those to come off. So is there a way, are there tips and tricks that you can teach us around that?
Other than, so the first thing is to check to make sure it's accurate. Sometimes it is not accurate because you may have paid it off and it's not considered paid. When you pull your credit report, you will see on the file whether it's paid or it's not paid. If you have paid it, make sure you note it as paid. What the credit scores do, they give it less and less meaning as time goes. And over 6 years, it's supposed to completely come off of your credit file completely, the one that the lenders see, after 7 years. But after 6 years, nowadays, even after 5 years, they are giving it less and less and less meaning, especially if it's paid. If you paid it and they did not note it as paid, it will still remain current as if you owe it. So it is important to actually make sure it is removed, even when it's said as paid. There is no magic eraser that's going to erase it, but you have to make sure that it's said it's paid. And if it's been paid and it's been several years and it has been, like, maybe it's been 5 years ago, you paid it and nobody noted it, you have to make sure that you let the credit scorers know that I paid it 5 years ago, so it should be a 5-year paid collection. That counts much less than a collection. So it's very important that little detail, that if I've paid it, note it as paid. And if you have not paid it and you could not pay it, next week we'll do a lecture on debt management, and we'll talk about consumer proposal and bankruptcy and how that can be part of your recovery journey, if that is something that you're considering. Sorry, a friend of mine wanted to call the credit company to write off her credit since she lost her job. How will this affect her score? Significantly. Significantly. This is not financial advice, but this is a 6-year negative thing on a credit card. She might just have to call and make sure that she lets them know she's going through hardship before she decides to let them write it off. They don't just write it off, they cascade it down to debt collectors, and then debt collectors will be haunting you for another period of time. Just call and say, I'm going through hardship and I'm definitely sending vibes that she gets a new job and doesn't have to write it off. If she wants to buy a house in the next 6 years, that's going to affect what she can qualify for. There's a big problem in Canada for credit cards. Okay, and I just put the cities that are highly indebted, but everyone's carrying about 5 to 10,000 in credit cards. That's a big problem. Now, this is how to not abuse your credit. Do not borrow to invest. Okay, let's just get that out of the way. Credit card interest rates are so high that you are not going to buy enough Bitcoin to make it to the next cycle. Just don't do it. Carrying a balance permanently. Credit cards are not used to supplement your lifestyle. Try to live within your means. And then lifestyle inflation. Yes, everybody wants to take photos on a yacht, but it's not as important as the peace of mind that you'll be foregoing by putting that on your credit card. Now, here are some tips for how you can preemptively manage your credit card. Assess your buying power. If you need to buy shoes or you need to buy something big, obviously you buy it on your credit card because you get points or whatever the case may be. But make sure it's something that you can actually afford, that it's in your budget. If you have a problem with the tapping, I know the tapping is so easy and light. Starbucks, you're tapping, fondue, you go tiramisu, you're tapping, and sometimes I've actually noticed some of the donation people have started going around with a tap. Have you guys noticed this? The people on the street asking for donations are like, I don't have cash anymore. Is not like an excuse. They're like, pull out your card, let's tap. Yes. Make sure that you leave your card at home if you have impulse. If impulse is your thing, just know yourself, don't play yourself, just leave the card at home. And then just call your bank today. Everyone here, you don't have to be in financial trouble. Call your bank today and ask for a lower rate. See what they're going to do. Most people are on $19.99 for no particular reason. My credit card is at $11.99. And all I had to do was ask. So in any case that you're ever going to run a balance, you run a balance at the lower interest rate. The situation where Ife's friend is in, if you are in a position where cash flow is hard to manage and you're going to possibly miss a minimum payment, call your bank and let them know you're going through hardship, and let them know that this is temporary hardship because we are God's people. Blessings are on their way, and they will work with you. Just don't stop picking up the phone, opening the mail, and trying to go ghost. That does not work. They will send your card to collections, and then it will be 6 years between that and any other good quality credit that you will find. How to not miss a payment. Justina stole my thunder on this, but thunder is still coming. This is how you don't miss a payment. You set reminders, put it in your calendar. Your phone will remember better than you. You schedule automatic payments. You can go into every single credit card company and say, take at least the minimum amount from my savings account, and they will, every time it's due, without missing a beat, they will withdraw and you will never miss a payment. I would implore every one of you to set up the minimum payment automatic withdrawal from an account that you know will have money, and if it doesn't have money, it should at least have overdraft, because overdraft is not going to be the same as missing a payment. Overdraft can go under, but it's not going to be missing a payment. Now, the reason why I say if it's asking from checking or saving, whichever account you know is going to have money. And I recommend checking because checking could potentially have overdraft. I've never heard of overdraft protection on a savings account. First of all, you've gone too far. If if your savings account has overdraft protection, you have officially gone too far. But if you have a checking account with some overdraft protection, even if it goes into your overdraft, it will make sure you don't miss a payment and keep your credit intact. I implore you to not use cash advances. Cash advances increase your interest by another maybe 6-7%, and it starts calculating every day. That is not good for you or for your credit, because it increases how much you're going to have to pay as minimum, and it increases how much they're charging you as interest. Second, monitor how much they increase your credit balances. Sometimes banks who see that you're doing well will increase your amount just casually. Just they keep increasing. If you're paying your bills on time, they will keep increasing. It's not bad, but it's not the greatest if you don't want the credit, because it exposes you on a higher number to identity fraud. It exposes you to the illusion of wealth, that if you have, can I call to reduce my credit balance? You can call to reduce your credit balance, credit limit. And yes, if you have a balance and you reduce your limit, your utilization will go up. Automatic increases actually reduce your utilization because you're getting more money you're not using. But we have seen that people who get more money use it. So that's the reason why I preemptively tell you it's not the greatest. Take advantage of welcome offers as well. Don't close your oldest account. But if you are one of those people that travel and you see Avion is saying, hey, we'll give you a trip to Jamaica if you sign up for a credit card, you have good credit score, signing up for that to make to take advantage of the points is actually good business. Now, don't use that second credit card as your sign of I have more money, because you didn't have more money, you just got the benefits. Okay, those are some tips that I wanted to leave with you. And obviously, I'm a financial wellness expert, so I have to tell you a few things about avoiding scams, people who are giving you pressure to pay this and pay that and pay this and pay that. Stop them, ask them to mail you whatever they're charging you, whatever the bill is, send it by mail. Don't let anybody pressure you over the phone. Don't let anybody tells you there's a risk-free investment. Don't let anybody tells you everybody does it. There's no shortcut to increasing your credit score. So don't fall for any of this. Okay? So that's it. But wait. I've got a few more slides because I like you guys. I want to teach you the Pareto principle. Not everything needs to be done today. Your 80% of your results will result from 20% of your actions. So pick one thing and do that one thing. Don't try to do everything I say today. If it's adding automatic payments, go and add automatic payments. If it's looking for your credit file, go and look for your credit file. Don't try to do everything today. Pick one and go do it. 80% of your results will come from that. That's called the Pareto principle. Second, if you're having financial setbacks, this is the framework that I recommend. Go through some acceptance. It's almost like a grieving period. Like, dear Lord, why have you forsaken me? And then agree that the Lord has not forsaken you and take some decisive action that, okay, from here on out, I am going to do this without fail. And that's it. And give back to your community because you are all good people. And yes, that is pretty much it for me.
Thank you, JP. This has been very, very insightful and very humorous. So thank you for that. I know there's a few questions in the chat and we're over time. So let's spend the next 5 minutes on Q&A. So folks, add some questions on the chat. In the meantime, JP, I did personally have a few questions that came up from what you were sharing.
Yeah.
If you can go back slides, I should have been writing them down because there were so many of them. You just gave us so many nuggets that some of them I forgot. So the next one.
If you mention the topic, I will remember which one.
Yes. Okay. So no, one was around cash advances. So you mentioned cash advances having high interest rates, and I absolutely agree with that. I will just mention that with Woveo, we actually have a cash advance program that is launching this week or next. That is no interest cash advances for those that need some support for the holidays. Because I know the holidays, people are traveling back home, you're buying gifts, you're hosting, you're taking care of family. So we don't want you going to the payday lenders and paying those high interest rates. So keep an eye out for that. I've posted links in the chat on how you can get involved with Woveo, whether by joining our community or joining our community or filling out the form for the grant as well. So that's one piece there. Now, earlier in the conversation, JP, you mentioned not closing accounts and keeping them open and how that impacts your credit score. So is that specifically for credit cards, or does that apply for because the phone bills as well count as a credit? They go on your credit, right? They go on your credit as a revolving account or something like that. So does that account for those too? Because personally, like I changed my provider, my service provider recently, because Rogers gave me a better deal. So I'm trying to ascertain how that impacts my score.
So the great question, by the way. This is the idea of your longest active credit account. So it doesn't really matter. For some people, it's the phone. Some people it's the credit card. Some people it's a car. Some people it's um, I'm trying to pick things out of the air.
Mhm.
Yes, whatever the longest active credit account is your anchor. So it's just a matter of months that you've shown that you can pay the bill perfectly.
Consistently. So
So
if I do change, if say Virgin, I've had Virgin Mobile for say 7 years, and I decided now to close Virgin and transition to Rogers, that counts as new credit and closing on a line of credit that then impacts my length of credit.
it 100% does.
Mm,
Now the question would be, if you have another credit card that you got around the same time,
okay.
if you lose 5 6 months of length of credit, that's not
Mhm.
that's not terrible.
Mm,
Don't stay in a bad deal because this is like 6 months ahead. The more important part is that 6 to 7 year period. If you have an account that is 6 to 7 years old, the other ones can go. You can renegotiate, you can change vendors and everything.
I see, I see. Okay, that makes sense. And then I see if it has a question, I have one similar to her. So if it says on negotiating reduction in interest rates, how do you go about this? I would add a second part to this question, which is something that I've heard people say. I don't know if it's just something in the US anyway. I don't know if people do this in Canada, the pay to delete. So if you have collections on your file, that you can call the collectors and ask them to delete it in exchange for a payment, or you can ask for a reduced payment to say, okay, let's settle for $200 instead of $1,000, for example, and they'll be able to mark that as paid on your credit file. If you could speak to those two, I think that'll be very helpful information for folks to have.
Yes. So the first part is, how do you negotiate your credit interest down? It's similar to how you negotiate your Rogers rates. Uh, like, one of the things that people really misunderstand about lending and getting a credit score is having a lender, is that the lender wants the money out of the shop. They want you to have that credit. Without you having that credit, they don't do business. So you are a valued customer. So if you say your conditions of being a customer is that you have a better rate offer somewhere else, they are behooved to look at it. Sometimes people say, "Oh, you have to say, I have some a little bit of hardship, whatever, whatever." That's I didn't have to do that. My negotiation was strictly based on, I have better offers other places. So like, whatever comes natural for you in your negotiation. If you want to say, hey, listen, uh, if you don't, I will close it and go somewhere else. Maybe you shouldn't go that far, but it's just a matter of negotiation. You can say you have better offers. You can say this is onerous, a little too much. You can say the quality of loyalty that you've given that particular bank. You've been with BMO for 5 10 years. Like, what are you guys doing? Like, everybody else wants to treat me better, but I've been with you for so long. Yeah, so that's how you negotiate. Like, the strong part is, the lender wants to lend you the money. So don't lose your confidence because we understand that, oh, it's hard to get credit. No, no, the lender actually wants to give you the money. So the collections part, pay to delete. Uh, Pay to delete, I cannot endorse that that's a real thing that happens. And please follow up with me, because last time that I checked, it was not confirmed that you can actually delete, uh, like, into thin air, your collections. Now, you can settle them so that they are noted as paid, but them actually coming off as something that never happened, I'm not willing to say that that has happened. I know I've seen people in the US advertise that they can clean your credit score. Unfortunately, some of them have been also fraudulent. So if you hear an offer that is too good to be true as far as cleaning your credit, that probably involves removing your collections in that manner. Some people dispute collections, and you ask them for documents that prove that the collection is there, and they have to send you physical forms of accounts, dates, get your name correct, get like go through it like a lawyer and say, okay, unless you can prove it's me that owes you and I owe you this much and how you go to this number, especially when they transfer them from like different institutions to bill collectors, you can try that format, and then if you delegitimize it, then you can go to the credit scoring uh, companies and say, hey, this is illegitimate because they could not prove that it's me that owes them or that I owe them this much. But I cannot say that out of thin air you can just have it poof and disappear. So the pay to delete part, I am not aware that it's possible.
Okay. No, that makes sense. That makes sense. Thank you for confirming it, because I've seen it a lot in the US. I've never heard of it in Canada, but I've seen it a lot in the US. But you're right in that it could just be some fraudulent activity there.
Can I,
Okay.
yeah, can I add a little bit of something to that?
Mm-hmm.
You have collections for the collections. Let's say if you owe 1,000, collections usually buy these collections from the banks at 10 cents to the dollar. So they bought your collections for 100. So even if you give them 200, you should negotiate more aggressively with your collections people, especially if you have the money to settle that day. You say, let's say you owe 1,000, you say, okay, I'll give you guys 200, but you have to send me a paid out letter. Then that's one way to clear that up. But continue.
Okay, okay, no, that sounds good. I was going to have us wrap up, but you raised a good point there. So you say to them, I'll pay this amount. Do you make the payment before they send a letter? Because sometimes they can trick you
That's
into paying
yeah.
without acknowledging. And yeah, so what is the cadence there?
When you're dealing with collections, you have to understand collections are the so the totem pole of the financial industry. At the very, very bottom are probably payday lenders. They are very what do you call it? They are very predatory. Collections are just above that in the predatory nature of things. They are gambling on the fact that they'll be able to harass you better than your bank will. So when you're dealing with collections, always ask for things in writing, ask for emails, ask for transcripts of phone calls. If they tell you something on the phone, ask for it in confirmation in email before you transfer their money. They will change their word on you because we have seen a zero trust from their agents, and their agents are are not trained to be fiduciary, which means to have your best interest at heart. They don't care about your interest, and they are not you cannot go and sue them. You can probably sue them for misinformation, but you probably don't want to spend that lawyer money. So just ask before you transfer them money, collections or payday people, ask for things in writing.
Even if it's just an email, right? Like, you know what,
Yes.
we're on the call, I'll send the money right now, but send me an email, and just to have that in writing.
Mhm.
Okay, there's so many questions, so many exciting conversations here, but the good part is this is only part one. There's part two next week. So a lot of the topics that JP has planted the seed for today will be discussed in further detail next week, and we've gone over time, so I'll wrap up. But JP, where can people find you? I want for folks to be able to connect with you and ask questions. If you're okay with it, I can share your email in the follow-up notes. But other than that, where can they find you on socials and things like that?
So you can find me on socials, but I prefer LinkedIn, but you can find me on socials at Strivers After 5 on Instagram. I've started the new socials, Pocketbook Wellness, and I have launched two great projects that I believe are going to change the way people look at money in Canada. The first one being the financial wellness score that I did speak to earlier. You can find that on all my socials. It's link in bio. And I've launched playing cards that teach you finances. So check out my socials on LinkedIn. I'm Jean-Paul Nyereka. You can use my name. And there's only one Nyereka in Canada. So, like if you jump on Nyereka, it's going to be me.
It's gonna show up.
Yes.
Amazing.
And
Thank you.
my score just made it to the first page of Google. So if you search that, you're going to find it as well. So thank you so much for being here.
Amazing. Thank you, JP. This has been very, very insightful. I also appreciate the humor. It's at the end of the day. I know people are tired from work and everything, so I appreciate the humor. And I look forward to next week's session. So, folks, I've put the link in the chat so you can register for next week's session, another hour with JP. And if please send me an email. Congratulations on winning. Please send me an email with your Interact email, and we'll process that $100 for you over the next week or two. But congratulations to you, and thank you folks for joining, and have a great evening. This recording will be available on our YouTube channel in the next week, and there'll be a follow-up email that goes out to you guys as well. So thank you. Have a good one. Bye-bye.
Bye-bye.